Today, welcome back to the final hour. The stream just shut down a second ago, so I'm rebooting it. Let me get a quick Y or yes, everything's coming through loud and clear. Good afternoon. Happy Tuesday. Taking a look at the SPX. We've got a lot of direction here the last 15-20 minutes. We have a nice little drop of 58.57. It's down about 40 points in the last 20 to 25 minutes. I had a broken wing butterfly this morning with a pin level right there and looking pretty good for full profit. I closed it out already. I get a 50-cent credit. I closed it down for 15 cents, so I netted 35 cents on the trade. So that trade is done. I added in a trade on SPX this morning, SPX this morning, and QQQ this morning. And I meant to post this in my daily profit play. If I have some interested traders in the service, I'm going to post in the tracker right now, and in the Telegram, I'm going to post a trade on XSP. So that is post the trade this morning, looking at some dividends, looking at some earnings. XSP is right here. That was the trade. So this is a 2/28 expiration. Okay, and filled for $1.20. Center price took the trade around 12.51. 12.51 would have been center price around about 5.80. All right. We got some liquidity levels to look at this morning. I told traders this morning I didn't really have a clean directional day. It's going to be a both, like market maker levels were lower and higher, and price is doing kind of exactly that, where it's not really deciding a direction. Now, intraday flows, you can see that yes, price did fall a little bit and then did rally a little bit. Now it's falling again, but on the bigger picture, like percentage wise and point wise, this thing's barely moving. This did turn into a red day. All right, based on this open right here, open positive. Now we are negative. So anyway, trade I took from this morning around 10:30. That was a broken wing butterfly. That was a call fly, so that would have been that type of structure. Grabbed 50 cents, and I did hang on to the one yesterday for a little profit trap. Not much, but a little profit trap. Today I just went ahead and took the profit at net 15 cent or a 15-cent debit, so 35-cent net profit per contract. And the reason why is we still had plenty of trading left in the day when this thing was coming to go back up. And I was like, well, if we come up and test the intraday high, that is going to threaten my position. So I don't want to sit here and hope that it goes up when yesterday we did the exact same thing and ended up getting back to the highs at the end of the day. So anyway, it all worked out. Grabbed some quick profit on that one, added another trade in. So let me throw in on Telegram here. So daily profit play. I'm putting this in Telegram right now for the daily profit play. Five. Okay, and I pulled the $1.20. So $1.02. Okay, and that would be 380 per contract. Okay, so that has been posted. Intraday wise, it's late in the day. Doubtful I'm going to get any meaningful credits if I did something, unless we were to drop harder. Could I look at an SPX trade today or even an NDX trade right now for these final little minutes? Are we able to stay above 2625, 2625, 2625. Let's take a look. 2625, 20. Come on, expirations. There we go. 2625. It's going to be fairly wide. Wow, even for the last 51 minutes, there could be some vol. I'm just looking at this level. I mean, I could probably get 26, maybe the lows here. This is yesterday's lows. Let's go 2600. See what this looks like. So this would be a put fly. So let's go put fly and go down to 600 as my pin. Good Lord. That's a pretty good looking trade for the last 50 minutes of trading. I mean, I might as well just bump this down a little bit more. So if I go down to the 590, that's a huge difference there. It's $10 different, 10 and 15. I think I'm going to try to take this trade. I'm not sure if I'm going to get filled where I want to get filled, but let's see, 590. 590 would be testing yesterday's low. Is this thing, I mean, again, there's risk in the trade. It's probably stupid to take the trade this late in the day, but I'm wondering at 590, which would be right in here, if price stays either here for the next 50 minutes, or if we come down and test the intraday low but don't necessarily break the intraday low. Very curious. I'm not sure what the fill is going to be though, so I'd be risking max of, oh man, this thing is like not liquid at all. $600. Let me go up one strike. I mean, that's a much better fill. Okay. Am I just getting greedy here? I'm risking a lot more cash. This is an $800 risk versus a $400 risk. 590. Let me see if I can get in here. This does also offer a profit trap. Man, that's a 30 delta this late in the day, huh? I'm going to stay out of this. All right, I'm just going to, let's talk hypothetical here. So if I took this trade, I'm going to mark it on the chart. So 2590. Let me build this out on, see if I can get a feed on NDX. So this trade is already profitable. We're well below the butterfly trap. So there's your 50 cents. It's trading for 5 cents right now. You can take most of the profit or just let it expire worthless. I'm going to edit this to the NDX and edit this. Let's put in my option legs, sell the middle, 2 contracts. All right, what were the legs I was looking at? 600, 590. So a 600 and a 590 and a, I'm guessing 75. Yes. Okay, so let's see what this looks like. So that is the current trade. Pulling in about 70 to 80 cents. Not a bad trade. I'm taking some risk on the trade. 720. So 590 is right here. I don't really see any big liquidity levels. Hopefully this is just the bouncing point. So like, is the market, I don't know. I mean, it's like I said, probably a bit more of a hypothetical trade. Just because the last thing I want to do is take this trade and watch price come into where it's potentially expected, right? We could still get to this expected move. This delta is a 30, but for fun, I will track this trade. Okay, so if we drop, I mean, that's pretty quick here, but if we dropped 100 points, you still have a trap opportunity, which is pretty impressive. But if we drop through that, if we dropped all the way to 580, this thing's taking on some heat. Plus for, fill wise, like 50 cents, 40 cents. I'm not even sure where this thing's going to actually fill. But the velocity in which I'm seeing price fall right now for the last 1, 2, 3, 4 candles is pretty severe. If I put this on NDX and we take a look at the last 4 to 5 candles on the 5-minute time frame, again, that's a lot of chop, or that's a lot of direction. Like that's like falling knife in a smaller time frame. But let's see, do we get to 590? So that's a hypothetical broken wing pin, just for a fun little alert on the day. Because if it falls to it, I mean, it's not that far away, right? In fact, I look at that as like, that's way too close. So I'm essentially like calling the bottom. I'd almost feel better off looking at these lows, which would move me down into the maybe the 550 to 525 zone. So if I can change this at all, let's go down here where effectively it's a single digit delta, and you're going to get way less premium here now. That's showing up as a debit, which is not good. There's a tiny little credit. You can't even get to yesterday's lows for a credit. That one's not bad. That one's not bad. 550, trading at a 12 delta. But we are still dropping like it's hot. 2550. So 20. So we got that, and then 2550 is right back to yesterday's low. Could we have enough directional movement on the day to get down to 550? That's a 2% drop on the day. We're already down 0.63% based on the gap higher. So could we have a 2% intraday low? Maybe. What's this trade? 37 cents credit to risk 900. No thanks. No thanks. I'll let this one pass. I'll take my butterfly trade for the day. I'll put in my XSP, QQQ, SPX. I'll be fine. I'll be fine. All right, let me check one more thing here on SPX. The trade, that butterfly was profit. That's why it zeroed out. Trade to put in fresh. I'm still looking at some profit taking. This one here needs another 10 to 15 cents of decay. So yeah, that's what I'm watching. All right, we're keeping an eye on those. This one's really close. We're only like 5 cents away. This is the one I was watching this morning. Another 5 I mean, it's right there. It's like bumping around the mid price a bunch. 105 is what my take profit is. 110, 115 mid, 105. It keeps bumping around. Hopefully another day or so, this one's going to be okay. All right. Hopefully we get that one to close out, by the end of the week. It'd be nice to have it close out tomorrow. Where are we at for volatility? I'm going to put another chart alarm here at 20,550. That's another hypothetical broken wing pin. That's if I could get filled, but I don't think it's worth that risk. That's way too close to price, and NDX is pretty volatile and very capable of dropping. All right, I'll keep an eye on that one just for fun. Let's go back to the charts. I did take a look at some dividend plays. So I did some dividend champions on a watch list here from Tasty Trade, Walgreens, and this one is Universal Health Realty. We got Altria, which is, I've got one of those in my portfolio. I've got a lot of Altria actually with some 50s and 5250 covered calls. This might be not be a bad one just to hang into, or keep rolling it. And then FLIC, First of Long Island, I'm guessing that's a bank. You got Franklin Resources, Universal Corp. Let me go to, not earnings, sorry, I went to go dividends. O is real estate, NNN, UGI, AT&T, not bad. I did notice like the 20-year yield. I mean, we're starting to get, has anybody heard this phrase in the markets, TINA? There is no alternative. That was essentially what the bond traders were dealt for the last 3, 4, 5, 6 years, when yields were extremely low, bond yields extremely low, and bond yields have been in a basically a 3-year drawdown out of 4 years, and they're yielding next to nothing. Now all of a sudden, yields, so the U.S. 20-year is up to 5.06%. And I mean, that's a pretty healthy yield for risk-free risk-free pension plays, risk-free IRAs, risk-free anything, like 5% is pretty darn good. So, bond yield at 5%, risk-free, I'd say that's pretty decent. 10-year is still at 4.78 with that scary factor of going up to 5+%. Holy shnikes, man. This NDX is still dropping hard. All right. And I'm just glad I'm not forcing a trade. That would have been cool. Not cool. All right. Anyway, let's see what else we got going on today. So 10-year, 20-year, making it pretty attractive. I mean, 30-year at 5%, 20-year at 5%. The inverted or disinverted 10 and 2 a year, the disinverted 10 and 3 month. Mortgage rates are up. The average mortgage is 6.93%. Take a look at some bond futures. Yowza. Bond futures down. Let me look at the TLT position, 85 down to a fresh low. I'm still holding a diagonal spread on this one. I don't know. We could have some more pain ahead on TLT. I think the bond market could have a bit of a break to it. So not quite ready yet. But I'm in for a longer play, like out to 2027. Let's see here. Mortgage rates. Let's go bond futures. Bond futures. Could I get something on bond futures? I think there's a lot of potential risk here, but the IV's got to be pretty solid. Let me go back to here. ZB. Let me see what other bond futures I have. So I've got ZB 30-year, 30-year, 30-year. Let's just go /ZB and take a look at a trade. Maybe a 1-1-1 scenario. Super liquid, lots of expirations. If I went out to the end of the quarter, why didn't that show up? There we go. Okay, so not as many expirations as I thought. I go up March or April. What's the play here in bonds? If I go out to May to August. So 220 days out. ZB at 110. We've got the nice lows here in 2023. So anything at like 107 or lower would be pseudo attractive. But I'm just going to make this mechanical based on a delta. So if I just bought a 19 delta, 18 delta, so I risk $172 to make $800. I'm going to see if I can offset that with a bit of a hedge in the 10 delta. So it takes $2,000 in buying power. I make $300. I would want to hedge this. So that's a 9 delta. Let's go to 81. I don't even have a bid ask in there. Well, that's lame. Let's see. $1,000 profit trap. Nope, it's a fudge. I can't believe how not liquid that is. All right, let's go back to a different expiration. That's August. Let's go to May. 107. If I buy the 107, sell the 106, and let's go to the 9, and I need to hedge this. So 9, like I should have some fills here. There we go. That takes it all away. Crikey. I get 0 credit on that trade. Son of a biscuit. No, it's not going to work. I mean, the trade would be you got to accept this crazy risk. It's a 9 delta. There's a 96% chance of profit. If the bond market breaks, I'm on the hook for a lot of risk here, which I don't want. So I'm trying to mitigate that. But this is a super high probability here. IV at 48.5. Income wise, I'd make $125. Maybe make this a little bit cheaper. Now income is 150. That's also going out a lot of days for that type of. That's not a lot of income for going out that far. $200 on this one, 96% chance of profit. We'd have to have like a legitimate break in the bond market if this is going to have any chance. But if it does, I can also roll this. So I can keep an eye on it if I like the trade enough. 9 delta, there's only, I mean, the assignment risk, I'm not taking an assignment on a futures contract. I would just roll it. But the problem is I don't have a lot of expirations to roll to. So if something were to happen from now until May, something very disruptive, I would have no alternative to really roll it. So I think that is enough to say no thank you. All right. Anyway, I mean, I do think that at some point in 2025, the bond market's going to be a little bit more interesting. I don't know if that has to be like a peak in the 10-year yield. If we start to peak in the yields in general, if we start to see that the bond market, so if you look at your, IEF and TLT, if the 7 to 10 year, 20-year bonds are starting to turn, but they still have some pressure to the downside. Until the 10-year turns, the 10-year is going to have to turn this way. 10-year turns bearish to see that your, IEF turns bullish. So there could still be more pain ahead. I should just draw a trend line there. It's probably the easiest way to be patient on the treasury here. So let's go trend line on bonds. I do have a diagonal spread, but that's out a couple of years. All right, there's live price on NDX. Just spot checking that. All right, what else do we have for the futures market? Here is Aussie futures. I don't think this is quite ready. This is another one. So, I've talked about a lot in currencies. If I think that the dollar's ready to make a move to the like, if the dollar index is going to get weaker, then I could come into Australian dollar futures market and do some bull call spreads. I could go into the euro market, bull call spreads. I can go to the bond market, bull call spreads. I don't mind those trades at all, actually. I just don't think it's ready yet. So if we start to see that the Aussie futures is down here, I'm just going to set a chart alarm around that flash crash level. So we'll go 57.05. And I know that's pretty extreme. There might be a near-term relief, but if we start to flush lower and it's just all dollar strength, I would look at a dollar basket trade later. It might be second half of this year, might be later this year, might be 2026 is a better timing for it. But basically, I'm watching. So if the Euro futures, this is the same thing in trading Forex. This would be like scaling in at parity, 1.00 down to 9,600, and I can use options instead of trading currencies. Now, there's nothing wrong with trading Forex, but it's a lot easier for me to be risk defined. So that way I could be dead wrong. So rather than having to scale in and watch this thing potentially get worse, I could use options on currency futures. And if I'm right, easy money and likely an asymmetry reward to risk. So as an example, if I go to /6E for Euro futures, and let's say that I go out, 80 days or 50 days, that's fine. If I were to buy a call, sell a call, I could get a $337 profit for a $287 profit or risk. So it's a fairly favorable reward to risk. Now we get 700 for 550. Kind of like this one a little bit better. If I go one strike higher, that's 50 points, by the way. I think I could get that, on a higher time frame. So if I did 337 minus 287, 337 over 287, that's 117% return on risk. It's not a bad trade. If I went one strike higher, now I get 375 to risk 250. Not too much more favorable, but not too bad. 360, 250 over 250. Get 145% return on capital. Not bad. Food for thought. So 6E, 6G, or 6B for British pound and 6A for Aussie. Anything here in palladium, I can't trade this on Tasty. Platinum, I like platinum to come a little bit lower. We've got corn futures. Wow, corn futures making a nice little run. Is this actually translated into some ETFs? Yep, look at that. Corn ETF. That's a CFD, I think, isn't it? There should be this one. This is a fund that's trading at 20. I mean, I missed it, and it wasn't low enough for me to say I'm going to buy it anyway. But Corn futures, I had a chart lump down here to see if it's coming back to major lows from COVID. It did not. What we might end up having here is a reversal pattern. It's maybe a pretty good trade. So, we're challenging this level. We're above the 200 moving average. This looks like a potential setup for a push higher. Again, if I like this trade, this is something I might be incorporating into 2025's trading, but there's corn futures, and I can figure out how to trade it. If I go out 66 days, put in hopefully a bull call spread. I risk $100 to make $150. Cool. So if I did that on 5 contracts, risk 500 to make 750. So I'm not going to do it right now, but if we come back into, let's say, this area, let's say that this is a test of the high, we come back in and we retest this halfway point, I can swing trade that with options. If we come back into the lows, I can swing trade this with options. I can go 1 contract here, 2 contracts here. Or if I go, 5 contracts here, I go 10 contracts here. I think I can get a trade there. So not a bad position. I'll actually take more of a look at that one. S is soybeans, so ZS is soybeans again, kind of bouncing off the lows. This one would be better if it just came a little bit lower. So maybe this is a rejection, maybe a falling wedge or something like that. I'd like to see it get back positioned to that 2020 level. W is wheat. Wheat is still not really making any big movement. Cocoa, I wish I could sell it because I wanted to short it. That would have been a pretty good trade. So we blew through the top. That would have been a really nice bear call spread or a bear put spread, either a credit spread or a debit spread. But cocoa futures is heading down. I think this would be a fantastic pattern. If it's all going to set up here like this is a top and this thing works its way all the way back down, any type of pullback here, I think cocoa comes back to reality at some point. But can I trade it? I don't think that I can. So /C. I can trade crude. Can I do cocoa? I don't think I can trade it. Futures. Gold, gold, gold. Heating oil. This is all oil. All right. I don't think I can trade cocoa futures, unfortunately. It's fine. What else? This is a commodity-based fund. Son of a gun. All right. So it's off the lows, 22 to 24. Nothing to get super excited about. But I have been tracking these for a reason. These are commodity-based funds. They're full of a bunch of things. They've got some precious metals. They've got some industrials. They have some oil, some gas. They've got some agriculture. So, this isn't necessarily a great trade because this would be the rotation of value. This is like the low beta, right? So 0.32 FTGC, 0.28, like very low correlation, much lower volatility compared to the S&P or the market itself. Question is this going to be like, is this time to buy? I don't know. Dividend wise, no dividend on DBC, almost a 3% dividend on FTGC. Junk bonds, something to watch. Spreads are getting a little bit wider. Got jobless claims, continued jobless claims. China had a nice little pop today. Still doesn't change really any structure here. Alibaba, gaps higher, but nothing to get excited about. Baidu, same thing, a little bit lower. FXI and KWeb, I'm out of those. MCHI, JD, a nice pop up today with a big gap, but starting to fade. Schwab dividend, Schwab growth. I'd like to pick up some Schwab growth here around 25.60. I've got a couple. I bought some shares of both SEHD, SCHG. I talked about this earlier this morning. If we see the S&P is showing like 10 to 11% of stocks above the 50-day moving average, I'm looking at that as a timing indicator because that shows essentially everything is down. NASDAQ, same thing. If we come down into the lows, like look at today, 19.8% of NASDAQ stocks above the 50-day. I love to see it go a little bit lower towards like 11% or 10%. And I'll start looking at that as a buy opportunity. Costco, want to see it pull back more, probably some income trades if we get it. Walmart, I own some stock, but I've got it covered out to March. This is a collar trade. Nike, $65 and $60 cash secured puts. Home Depot, Lowe's, staying out of those for right now. Visa, MasterCard took a profit on that a couple weeks ago. Johnson & Johnson, I rolled out. Progressive bouncing hard off the 200 EMA. That's beautiful. That is a beautiful thing right there. Let me check the price on this one. 221 expiration. And I want to check and see. So this is PGR. And February. So we're trading at a 25 delta for the sell put. So there is a potential that I could still get assigned here. Potential assignment. We started off originally with a really high probability profit on CB and PGR, but having it bounce off the 200 moving average is pretty nice. We'll see. It is, 221 is how many days away? 38 days out. Let me check and see how this trade's doing actually. So PGR took the trade for 265. It's up $50. If I wanted just to take the profit, I could take the profit, but I'm going to wait a little bit longer. So I've got 19 days to manage it. I think I got in here for like a 45 to 60 day. If I want to eliminate the volatility, I should just close it now and move on. But I think I'm going to. I mean, that was right, man. That's right there at that 200. I think when I took this trade, it was down here. We had some flush. I talked about this as a potential like flush down to the 200 and then a push back off of it. So if there's more bullishness ahead for Progressive, like that's a great spot. I may not own any shares of it, but if I can just generate the income, I got $2.65 for it. Okay. Hershey, is that what you're asking? Hershey, HSY. Hey, no good, man. Wow, what's up with Hershey? Are you saying that instead of cocoa? I mean, that doesn't look the same. If I go cocoa futures versus Hershey, looks very different. If that's what you were saying. I would say, though, if Hershey came down into like the 120 zone, let me check on this one fundamentally. Hershey, let's see here, pays reliable dividend at 3.5%, trading well below estimated values. Debt's not great. Price to earnings, price to sales. Okay, fine. Let's see what it is against the peers. I don't mind this. Current price 157, 283 fair value discounted cash flow. Against the peers, Hershey, compared to Kraft Heinz, compared to General Mills, not bad. IV is fairly high. Do I like this stock enough? I don't think the premium is going to be great at all, but I will check. I'm going to set a chart alarm down here. If Hershey's back into like COVID lows, I'm just going to put a 120 chart alarm. If we're back into COVID lows, I'm scooping up some Hershey. So this thing is down 44% from the highs. And what is happening news-wise that maybe supports it? We got a lot of red on the day. Meta is down, Google's down, Nvidia is down. If your Mag 7 is down, I mean, look at this. This is how powerful Mag 7 is. No, never mind. I saw a lot of red. Now it's updated. Well, I take that back. Look, Eli Lilly, not Mag 7, but healthcare is down. Meta, Tesla, Amazon, Google, Apple, Microsoft, Nvidia, Broadcom, all down. So if this is down, guess what? Look at how much green there is out there today. So this is either showing like there's more rotation happening out of Mag 7, which is fine. But it also shows like because of the market cap, if you just have like a little bit of softness in your Mag 7, it's hard for the indexes to go up. Today's a good example of that. Indexes are down. S&P's down 0.25%, NASDAQ down 0.6%. Dow is actually up slightly. Russell is up a little bit more. Okay. All right, Russell, you go, girl. Anyway, but Mag 7 down. We got a lot of green. A lot of green in the market today, and yet indexes are down because you've got your large market cap down. What's your advanced decline line? You got 60% of stocks advancing today, and we're still red in the indexes. let's go to HSY and see what type of major news we have. We have a downgrade back in December. Downgrade. So all these have been downgraded. Price target. I mean, it's well below these price targets. Changing to 160, changing to 163, 182. Now we're trading live at 155. Okay, like I said, I doubt the premiums are going to be that awesome, or the fills for that matter, but I'm always curious. Earnings on Hershey February 6th. If we go out, let's say there's no March or April, so 45 or 122 days expiration, I think February looks a little bit better. But this is exactly what I thought. The premiums on the put side are absolutely garbage. So if I were to sell this, I get no credit. So basically the only fill I get is around 145 bucks. If I were to buy that and ratio spread this thing, I mean, I get $2 on a 91% chance of profit. That's not a bad trade. Expected move on Hershey is 12 bucks out to February. We do have earnings February 6th. Let's do some math here. HSY. And let me see, do we have any major levels on Hershey? 155 looks okay. For a defense level, go to a higher time frame here. All right, anyway, let's check the averages. So average move around 4.25%, 2 and change, 3, 3, 3, 4, 4, 5. Okay, I would say 4 to 4 and a quarter. I'll be conservative and say 4%. 0.04 times 155. So about a $6 move on Hershey. If I put on this ratio spread right now, I don't really have any protection to the downside if I do a ratio spread. If I decided that Hershey's earnings were okay, let me see what the earnings trend has been. Last two earnings have been a little bit rough, but other than that, very consistent for profitability. I mean, if people are stressed, don't they eat chocolate? So 140. All right, I don't mind this trade actually. Let's see. So if I went out to February 28th, could I do this trade right here? Let me change this to a 1, change this to a 1. What? So I could buy, sell, and get nothing for it? Well, that sucks. All right, let's move this down. Consider this trade here for 2 contracts. I get $2 and change. So it's a nice little income trade out 45 days. I still have a potential assignment risk. This is a 24 delta on the assignment. So if we pulled back with a break even, 145 minus 5 minus 209, I'd own shares of Hershey at 137. Okay, it's not awful. 137 would be a decent discount. I would own the shares around 51% off from the all-time highs. Like, I just don't know why the stock is getting beat up so badly. That is a good question. Well, I do wonder if this is a lot with consumer staples. I mean, it's food related. Is this consumer non-durables? I wonder if this is in any sector. Let's see. Goldman Sachs cut his price target to 150, maintaining a sell rating, average hold. Okay, there's still a 3.5% dividend. Not the worst. Technically, it's beat up like crazy. This thing has been sucking wind for a year. Sell, neutral. I mean, it's a bit of a falling knife. I don't love it. If I owned it at 137, is that right? No, what did I say? Yeah, 137 and change. 137.91. If we look at the COVID crash lows here at 1, I guess the important thing is, would I be confident enough to repair this trade? Threat of a buyout a few years ago? Okay. All right. I mean, I like 200 bucks, and I like the probability of profit at 91%. We do have some earnings. That's the one concern I would have. If I did a credit spread, or I mean, a credit spread's not bad. If it took a huge nosedive, I could grab some income here, but I don't think I'm going to lower it enough to get down to 137 like I could on a ratio spread. So I kind of like the ratio spread. So if I get filled here over $2, I think I'm going to take this trade. Okay, so 209 for some income. Let me do 2 contracts here. So it'll be $400. Again, I've got to get filled here above $2. So I'm going to try to get filled at 210 and work my way down. 210 not filling. 209 not filling. 208. I will not accept less than $2 on this trade. 207. 206. 205. Come on, liquidity. Where are you? 204. Okay. And if I don't get filled at 2, I'm just going to cancel the trade. And that's probably where I'm going to get filled. I have a feeling I'm going to get filled at $2. 201. Final answer, $2. Not filling. Well, son of a bee. All right. Well, I guess I don't want the trade. Canceled. Okay. It's not ready yet. If we fall lower, COVID levels, way more interested in some. I'll stagger some trades here. I don't mind getting long in here, stagger some trades. Yeah, that's it. CB below the 200 moving average, but again, snapping back in a big way. Putting an income trade out here to May, quite a ways lower. This one should be totally fine. Palantir down to 65. I hope this thing falls lower. I wouldn't mind taking on a ratio spread. Otherwise, it's a nice little $300 profit. A couple of contracts there. Carvana, no. Redfin, no. Zillow, no. And then we did our sectors early this morning. Okay, so that should about do it. Let me go back to the NDX today. So my 590 was safe. The last 14 minutes here, the 590 is safe so far. The 550 is safe. I don't know what the fill would have been, but maybe somewhere between like 50 cents to 80 cents for a little broken wing at the bottom. I didn't take the trade, but hypothetically, they worked out just fine. So food for thought, but that was a tough call. It's like a 20 delta. I think the 550 would have been like a 10 or 15 delta. That would have been a little bit better to kind of justify the mechanics of that trade. But it was like $1,000 risk to make $30. So kind of a stupid trade. Profit trap, yes, but profit trap is difficult. And the day's not done. We still have 13 minutes. Who knows? But I think they're going to be fine. All right, I've got a webinar at the top of the hour, 4 p.m. And I think we're good. Final note here on some catalysts. S&P companies may take over a decade to grow into high valuations. What? So let's just say the 490 companies that haven't been doing much the last few years may take over a decade to grow into high valuations, sparking fears of prolonged market stagnation. Let's see here. Fires are renewing back in Southern California. Palisades estimated to cause $10 to $30 billion in losses. We've got somewhere between, this could be like one of the most expensive disasters of all time in the U.S. They're estimated like $150 billion in damage. We've got an EU gas price spike. Last Russian pipeline driving energy volatility and fears. Goldman Sachs warns of gold mining disruptions in Mali, raising concerns for commodities and mining stocks. Okay, I still like gold long. Is everyone seeing here that China is exploring selling TikTok to Elon Musk? Potentially a social media play. I mean, he bought Twitter, took it private. I'm wondering if TikTok is going to be something similar to that. Saw Trump proposing an external revenue service today. Meta announcements of 5% workforce reduction signals potential challenges in the tech sector, investor sentiment. It's called AI. It's going to happen. People are going to be displaced. Goldman Sachs analyst, see, fires. Yep. So a lot of stuff on TikTok right now with U.S. China, trade war, trade talk, tech wars, TikTok, Elon Musk. That's what's going on. All right. If you would like to join me for my 4 p.m. webinar, let me see if I've got a link in my Telegram. Log in now. I'll just do this. If you'd like to log in, here's my Telegram. Oops. Let's go add, link, chat, Chris Pulver, Telegram, and Chris Pulver Discord. Both are free to join. If you want to join my 4 p.m. webinar, it is this actually is about liquidity levels and market maker levels. We have liquidity hunts. We have market maker defense levels. I can trade both sides of it. We can trade bullish or bearish. We can trade directional or non-directional. And I've been really picky about this strategy because I'm seeing so many steady liquidity levels that they're just not standout directional trades. And I want to make sure that I'm always offering like a high reward to risk. And that's been kind of challenging. So anyway, we're getting earnings season underway. I got one alert I put in today. Earnings season is picking up after next week. So it's going to be a lot more trades coming to double up service, which is what this webinar is about. So again, it's market maker levels, liquidity levels, the games that the institutions play, and how we can take advantage of them, and me trying to craft some trades that build up really nice profit trades. And give me a second. You can send it to. Okay. All right. So Chris Pulver Discord. Let me get the link for that, and then I'll pop into that webinar in just a few minutes. Invite people. I'm going to change this to just a 1-day link since you're here live with me. Okay, Chris Pulver Discord. There we go. So Discord, free to join. Telegram, free to join. Daily Profit Play, members only Telegram. Added a couple trades today. NDX holding tight. That's fine. Let me see what else I have here. Got a few more minutes. We can talk about this more tomorrow. But I want to see if we have any other trades in play. What's in play today? Okay. Some credit spreads, some debit spreads. If I went, let's say, bearish only versus bullish. Let's go bullish first. I think, look, the market overall, I mean, there's a lot of chop, and I think what we have to be ready for is either this continues to be like very indecisive in this area here, which is going to drive a lot of traders crazy, or because we test the lows, perhaps we test the lows again, test the lows again, test the lows again. If there's any type of capitulation move, that would be where I'd say I'm looking to get long and reestablish some long positions to get back to the highs for the year. If we come roaring back here to the upside and get back to highs, that's okay. But I'm not really believing the momentum behind that move. That's just me. I think we would have some type of broadening pattern. I think that would be a fake out trade, and then 2025 is going to be a very challenging year. There's so many things that are lined up for we can't go higher. And I know that's stupid. You can't do definitive in the markets. You can't say that stuff, but you can't have 10 stocks carry the markets to all-time highs. Like at some point it's going to break, and we're either going to, broaden out a little bit more where there's value elsewhere and the market's going to position for that, or you're going to see that the TINA, the there is no alternative, right? The TINA bond trader is going to start looking to pile into bonds, and institutional flows are going into bonds because it's such an attractive yield and it's essentially risk-free. So, look, 5 to 6% for pension fund is pretty darn good risk-free and with a tax break, and that's essentially where we're at. So I do think that takes a little bit of the wind out of the sails of the equities market, because going up 20%, 20%, 20%, all that's really helping traders do or investors do is stay ahead of inflation and the cost of living, So it's like you got to be invested. But if this thing can't produce a decent win this year, or you don't time it very well, a flat year in the market, this is what's crazy. A flat year in the market, you're actually losing money. A down year in the market, you are losing a lot more money because the cost of living is going higher. the price of the dollar is devaluing, right? The purchasing power of the dollar is devaluing, and it's like you have to, like, you got to make money. It sucks. It's really challenging. But I do think having a 5% bond yield or 6% bond yield, it's attractive enough to say, okay, we're not losing much, and certainly taking a lot more risk out of the equation. So, all right, anyway, I want to see what is in play today. So if we just go bullish trades, I've got a decent list here. Let me see if I can go by strength and filters. So sentiment bullish, trend following, not counter trend. Actually, cap size, let's just go large cap. IV rank, greater than 50. I want liquidity. Okay, so now I have some trades. We've got Amazon in play for a bullish trade. We can look at, let's see here. Best trade would be a bull call spread, I'm assuming. Let me see what that one looks like. Okay, so what is that trade? Give me the legs, man. All right, so there is a March 21st. Oh, I was like Snapchat. Okay, no wonder. I went Amazon, brah. All right, Amazon, pretty good setup. 215 by 250 call. I don't feel like throwing $1,000 at it right now. Amazon, that's a pretty shallow pullback as well. I'm not ready to get long Amazon. Not yet. Again, like, I'm liking this kind of light correction. Shares I own, they're covered up here to 220, and I rolled things out to March. So I've got a 220 covered call, which right now they may get called away, they may not. If price falls lower, okay, fine. I've got it collared and protected. I've got like out of the money puts at 195 and 190. Yep. So the 200 by 195, that's a ratio spread. I have some protection to the downside on own shares. But man, it'd be nice to see some Mag 7 stocks coming back into some attractive moving averages. So I'm going to pass on Amazon. APP, App Lovin'. Just reminds me of the movie Superbad. What on earth is this thing? Package software tech is this? Don't tell me this is semiconductors. What the hell is App Lovin'? Mobile marketing platform, app discovery. All right, what's this thing look like? Volatile share price, high level of debt, insiders selling like crazy, earnings are growing, forecasts are growing, price to earnings, price to sales, high. I don't know. That's a tricky stock. Like, what do you do with this thing? Right? I mean, did anybody know this thing was even a stock? I mean, we're trading at $13 and it explodes to $400. Like, I have no idea. I don't know it. Probably not going to take it. American Express, oldie but a goodie. Somehow hanging in there. If you want to see the health of the high net worth consumer or the wealthier demographic, then look no further than AXP. I did take a short on MasterCard and Visa that worked out really nicely. You can see there's some resiliency here in the stock in AXP. There's still a reasonably bullish trade on it. Not getting like the greatest score, but looks like this would be just buying shares. No thanks. So anyway, just looking through some trade ideas. I'd like a pullback. I don't think that's anything too hard to ask, is it? Daily bar count from the 200 moving average around 289 bars. I'd like to see some chop up here. You know what? I do wonder. When's the earnings? Earnings. Ooh, I was gonna say I could look at a like strangle trade, but I don't know. I don't know. I don't want to get stuck in something. Even risk defined. I don't want to get stuck in something. What's the IV rank? AXP 70. Okay. Let's go to maybe 45 days, $5 wide, earnings, potential catalyst. Let's flip this around. All right, I got to jump into this 4 o'clock webinar, but I am curious with a 10 delta. That credit's going to be terrible, by the way. If I'm going 5 wide and only getting 32 cents, this thing's going to be absolute garbage. 10 wide, yeah, 60 cents credit, 83% chance of profit. We've got a high expected move. I don't know. I might look at an earnings play in this instead. So I'll talk about that more tomorrow. So, all right, I'm going to go. I'm going to bounce into this 4 o'clock webinar. If you're in my Telegram channel, you can log in right there, and I will see you in a few minutes. Otherwise, if not, I'll see you tomorrow in Daily Profit Play. Closing bell and NDX by the hair of a shinny chin chin. I'm going to delete these 2 alerts. That would have been, at least one of them, Broken Wing would have been a nice winner. But again, didn't take it. No big deal. Shoulda, coulda, woulda. But had a nice little Broken Wing win today. And that's it. All right. I'll see you soon. Thanks. Bye.